Which project has contributed most to the recent bull market? Which crypto startup has a partnership with Swift, World Economic Forum? And without it, DeFi would not be possible. I think you have already guessed that we will talk about the Chainlink project, which surged 50% last week. Why is it the most important project for crypto? And when will Link reach $1,000? Let's get into it. As per CoinPost channel tradition, let's start by breaking down the project with its history and the people behind it. Then we'll talk about current partnerships and why Chainlink should be on par with Bitcoin and Ether. Finally, we will break down the timeline of Link and the prospects of this altcoin. For your convenience, you can use the timecodes to go exactly to the point you're interested in. However, I suggest you watch the full video to understand the scope of the project. So now, let's get down to business. Chainlink is the decentralized computing platform that powers the verifiable web. Simply put, it's like a bridge that connects two different worlds, the world of blockchain and the world of real-world data. In the world of blockchain, smart contracts are like self-executing agreements that run on computer code. They can do things automatically, like transfer money when certain conditions are met, but they need real-world information to make decisions. For example, they might need to know the current price of a cryptocurrency or the outcome of a sports game. This is where Chainlink comes in. Chainlink is a network of computers, nodes, that retrieve this real-world data and make it available to smart contracts. These nodes act as trusted intermediaries, ensuring that the data is accurate and reliable. So when a smart contract needs real-world data, it can use Chainlink to get it and make decisions based on it. It is this technology that has contributed to DeFi's strong performance and part of the recent bull market, but more on that later. In 2017, two friends, Sergey Nazarov and Steve Ellis, founded Smart Contract with a professor from Cornell University. The company was later renamed Chainlink. That same year, Chainlink held an ICO selling 350 million Link tokens and raising $32 million. By the way, even with the current bear market, the current profit of the token sale participants is over 100x's. Don't tell that to Gary Gensler. In 2018, the company integrated Town Crier Oracle, which allows Ethereum to connect with web sources using HTTPS protocol. This is the standard protocol for any website. This was the beginning of the development of DeFi. In 2020, the Chainlink standard began to be used by the Compound and AAVE lending protocols. Chainlink helped projects get data about real coin prices on centralized exchanges. This started the DeFi boom. In 2 years, total liquidity in DeFi grew from $300 million to $177 billion, all thanks to Chainlink. The development of DeFi has also affected the price of Link. Since the beginning of 2020, the token surged 25 times and peaked in May 2021. But then the DeFi market turned out to be overheated, and the Link token had almost no value at the time, which caused a 90% drop and a long trading in a sideways trend. Link's price dropped without much hope of going up. But a year ago, the company provided Chainlink Economics 2.0 with new tokenomics, big plans, and most importantly, stealing the Link token to keep the oracles safe. The more tokens staked, the more trust in the data provider. Oracles are interested in staking Link, which should have a positive impact on the price. This is not the only advantage of the new tokenomics. Chainlink Build is a new program where projects pay 3 to 5% of their own tokens in exchange for Oracle services and technical support. That is, for staking, you can get 4 to 5% per year in Link plus tokens of other projects. On December 6, 2022, Link staking was launched only for a select few, but unfortunately for token holders, it had no effect on its price. On the contrary, Link fell to a 2-year low at the beginning of this year. This led to a very interesting situation. At the beginning of 2023, Chainlink had 1,534 projects in its ecosystem and 1,800 integrations with major companies such as Swift, AWS, T-System, and others. Developers had started staking and the token was at the bottom. Suspicious, right? So in March this year, I recorded a video about Chainlink where I suggested buying the token at $6 to $7. Now the price is almost 2 times higher. So to not miss such opportunities, subscribe to CoinPost. And let's go on to break down the current situation around Chainlink. Why has Chainlink grown so dramatically? I have 2 simple answers. First, Chainlink has been trading in a boring sideways trend for a year and a half. They usually end with a sharp move higher, as I predicted in a previous video on Link. So there's nothing surprising here, and that's not all the potential this project is capable of. Second, as one Twitter participant joked, Link is growing because someone just reread the white paper. And indeed, Chainlink 2.0 is a solution for hundreds of trillions of dollars. We live in the data age. Chainlink gives you access to data you can trust. It connects the blockchain to the real world. Chainlink has successfully enabled over $8 trillion in transaction value for blockchain applications. The technology has proven to work. This is evident in Chainlink's key partnerships. In August, SWIFT, the interbank messaging network, used 11,000 banks worldwide, partnered with Chainlink and more than 12 of the world's largest financial institutions to deploy CCIP for cross-chain tokenized asset settlement. Partners include New Zealand Banking Group Limited, BNY Mellon, Citibank, Euroclear, and others. In September, ANZ Australia, the largest institutional bank in Australia with $1 trillion in assets under management, partnered with Chainlink to use CCIP to enable cross-chain, cross-currency, and cross-border settlement of ANZ-issued RWAs for its tokenized asset marketplace. Chainlink later published a case study detailing their experience working with ANZ Australia on asset tokenization. Later in September, Stephen Prosperi, Executive Director of DTCC, the world's largest CSD settling $2 trillion in securities volume annually, announced a collaboration with Chainlink to bring capital markets to the chain. From this, we can draw a simple conclusion. Chainlink is too cool to be that cheap. Funds and banks are predicting the tokenization of all existing assets, estimating the market at hundreds of trillions of dollars. And without Chainlink, that tokenization is impossible. That's why the big players are buying while you're still in doubt. According to Santiment, addresses holding between 100,000 and 1 million Link have accumulated $38.5 million worth of the crypto asset in the past week. At the same time, there has been an outflow of capital from retail investors who are locking in profits. The whales will be making dozens of X's again, while the retail investors will settle for a 30% profit. Here are more serious people betting on Link. Analysts at K33 Research believe Chainlink is the safest bet on the asset tokenization trend. If we want exposure to the RWA narrative and to avoid being sidelined when it takes off, Link is the safest bet, said K33 analyst David Zimmerman. In addition, Chainlink's hackathon called Constellation kicks off on November 8, which could also help drive interest in Link. Can Link be worth $1,000? Let's find out next. Link has been in an accumulation zone since May 2022. Big whales have been buying while retail investors have been selling. Now it is important to consolidate above the $9.7 level to avoid a pullback. The next resistance zone is around $19. This doesn't mean that the price will get there within a week, but we can expect such a growth before the end of the year. Traditionally, every rally has a retest phase, so I expect to see a small pullback and then a continuation of the rally. In addition, the market is still in a bearish phase where any growth will quickly fade. On the 4-hour chart, the RSI indicator shows that Link is overbought. This is another possible sign of an impending correction. However, from a global perspective, Link has the potential to rise to 5 times its past ATH. However, this is not the limit. The market size of tokenized assets is estimated at $16 trillion. Could Chainlink hold 1% of that market? If so, it would be valued at $160 billion. At the current market price, Link would have to rise to $287 to reach a capitalization of $160 billion. And that is just for a 1% market share. And if it's even 5%, here's a $1,000 Link for you. Sure, it sounds like science fiction right now, but we all can dream. Chainlink definitely has a bright future. The question is, do you have time to be part of its success? Hit the like button below the video and subscribe to the channel. Thanks for watching. Your Coin Post.